This morning, I'm going to be discussing something very important, and that is investor protection and building confidence in Uganda's capital market. Now, capital markets are somehow technical, but good enough have someone who is going to be breaking down these things. When I was telling a colleague of mine that I'm going to be hosting someone from the Capital Markets Authority, he was like, I never understand those things. What are they? But I see them sometimes doing certain things. So here he is with me. I have Nobert Barigye, who happens to be the public education officer at the Capital Markets Authority in Uganda. Well, he's ready, and we'll be discussing so much regarding this. Good morning, Nobert, and welcome.
Good morning. Thank you so much for having me here at UBC. I'm happy to be here. Good morning, viewers, listeners.
Now, to begin with, when we talk about the Capital Markets Authority, first, what is this and what is your mandate?
Thank you. So the Capital Markets Authority, or as we call it CMA, is a government body. Government body that was set up in 1996 through an act of parliament. And the reason why the Capital Markets Authority was set up was to regulate and promote the capital markets in Uganda. Now, the main work or the main mandate of the CMA is investor protection. We ensure that investors' interests are protected through numerous ways, as we'll discuss later. And we have several mandates, most importantly being investor protection. The others that we have is to promote confidence in the capital markets industry. We have to reduce systemic risk, but also to promote the capital markets in Uganda. So we do that through numerous ways. We also have to supervise the licensed entities. We approve all offers of securities to entities. We don't allow any company to raise capital from the public without getting pre-approved by the Capital Markets Authority. Now, I know capital markets is a very technical term for people that are hearing it for the first time.
That throughout you are going to be talking about capital markets.
Yes.
But what are capital markets?
Yes.
I don't want my audience to view something like Nakasero, St. Valley Kudembe, or even think there is a market where there is money and you go and pick as capital for your business. So this thing, capital markets, that's what I want you to define in simple terms.
Yeah, thank you. So capital markets, the best way to understand it is, first of all, to understand what a market is. So a market is, there are several definitions for a market, but if to keep it simply put, a market is just a place where buyers and sellers meet. And they meet for the main goal of transaction, to exchange goods and services. And of course, the main the main thing that they use to transact is cash. So it could be cash, it could be a digital, if you make a digital payment. But the main thing here to understand is a place where buyers and sellers meet. Now, when you look at our foodstuff markets, just like you've mentioned earlier, we have Nakasero, we have Kalere, all these different places. When you go to these markets, you go there as buyers. And the main reason that takes you there is you want to get value for your money. If someone were to give me 2 onions, let me use avocados in this case, because onions most times, for me when I shop onions, most times I don't think too much about onions, about the kind of onions that I'm looking for. You find, immediately you glance at onions, you already know that they are what. But then there are certain things like avocados. Avocados, you have to first squeeze it a bit to see, is it ready, especially if you're going to have it maybe for lunch that day or for supper that day. So when you go to the market, you're trying to get value for your money. And when you go to the market, of course, you go with 1,000 shillings, 2,000 shillings, and you want to get food stuff with that money. So you buy and sell. You will give your money and then you get food stuff. Now, when you look at it from an angle of the financial market or the capital market, instead of it being a foodstuff vendor, here now it is a company. It can be a company, it can be the government, it can even be an individual for something that we call a private placement. I'll talk about that. So what are these 3 entities looking for? So for the government, it's looking to raise money for numerous reasons. Part of it is to help it to set up infrastructure, to deliver public services. Now, for a company, we're looking at it raising money for the purposes of capital expenditure. Probably, maybe it wants to set up a new business unit. Perhaps maybe it wants to raise money for, for maybe to expand, their produce or whatever the case may be. Now, for individuals, it could be for any of the other reasons, just like government and a company. Now, for us, on the other end, the buyers, okay, of these securities, the sellers of the securities, just like how you have sellers of foodstuff, the government, a company, or an individual. Now, on the other side, for us now who are buying, we are buying these securities from these entities. And when I say buying these securities, I'm talking about buying instruments. So when a government is trying to sell value to you, they are selling what we call a government bond. When a company is selling value to you, they are selling what we call a corporate bond. And then we also have a company that can also sell a megabo or shares to you. That is also a way of raising money. Now, for the purposes of a private placement, it's also an individual like you and me that is selling shares to you for you to own a part of their company. So we have those instruments there. We have shares, we have government bonds, we have corporate bonds, and also we have something called a unit trust that I will also dive into a little later. So all these products are regulated by the Capital Markets Authority. And these are products that the public or Ugandan citizens can actually invest in, that can put their money in so that they're able to get value for their money.